The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Soaring investment costs outweigh an earnings beat for SpaceX, with investors jittery as AI capex doubles from the previous quarter.
Wall Street hits fresh records, fueling a bounce in Asian stocks as earnings beat and oil retreats. US Treasury Secretary Scott Bessent telling CNBC there may be movement on a pact to reopen the strait.
I think there is a chance we may have a deal today or tomorrow to open the strait and move towards a more normalized position in this conflict.
Novo Nordisk shares drop in the US session despite the drug maker upping its outlook amid apparent jitters over sales of its new Wegovy weight loss pill. We'll discuss with CEO Mike Duster this hour.
There's no doubt the bulls are in charge of this market. The last 4 sessions, we've seen the rally stateside, fresh records on the Dow, the S&P yesterday. We've had it in Europe. The records spilled all across the European markets, the DAX, the French market. We saw it on the Italian stock market as well. The question is whether it remains in place. And yesterday we did have some calls from the Federal Reserve for higher interest rates. The Fed Bank of Kansas City President Jeff Schmidt, he was talking in a speech calling for tighter policy yesterday. So again, the catalyst in play here, monetary policy, could that spoil the party at some stage? But also, so too, I think the catalysts here have been the tech snapback on the back of the selling we had several weeks earlier, but also the catalyst of the Middle East. And the signals seem to be, look, perhaps we're getting towards some sort of a ceasefire again, some sort of repeat of a memorandum of understanding. What will that do for the market behaviour? Yeah,
I mean, the thing when it comes to market rallies like the one we've seen in Wall Street in the previous session, I can't help but wonder about hypotheticals. You know, the thing that may hold things back is that despite the big earnings figures and really impressive numbers from so many of the big companies reporting this week, the thing that's kept a little bit of a break on the momentum is the big capex figures, and that's where investors have thrown in a little note of caution. I can't help but wonder, were it not for the concerns about the big outlay and expenditure, particularly on AI, data centres and infrastructure, could the rallies, could the record highs have been even greater? It's one of those we'll never know, but you can't help but wonder in a moment like this.
Well, the earnings have certainly been driving the rally that we've seen so far in the last several sessions. Now, SpaceX shares, though, have dropped. So as we talk about some reality check, they have dropped in extended trading as the company posted its first set of results as a public company. Q2 revenue jumped by 92% year on year to $7.8 billion, beating forecasts. The operating loss for the space unit narrowed to just over $500 million, also beating estimates. But concerns were raised over capital expenditure, which jumped sixfold on the year to upwards of $18 billion. Almost $16 billion of that went on AI. The company warned expenditure would remain around such levels for at least the next 2 quarters. Speaking on the company's earnings call, SpaceX CEO Elon Musk spoke about revenue projections.
We are expecting to reach 100 billion plus ARR in December of this year. And it's probably also worth mentioning that our internal projections for reaching $1 trillion in revenue, not ARR, but revenue, have moved up from 2031 to 2030. So prior to the IPO, the financial projections we had were reaching $1 trillion in revenue in 2031. We now expect that to be in 2030. And there's a non-zero chance of that being in 2029.
Well, Arjun joins us now. Arjun, what was your take on the results overall?
It's a question of what is SpaceX now versus what is SpaceX going to become. And I think that was the story we heard. What's interesting at the moment is if you look at where SpaceX is making the bulk of its revenue and indeed the only segment that's profitable, it's in Starlink. right now, the satellite connectivity play, which has been incredibly successful for SpaceX right now, and the company saying they're expecting to even launch a standalone mobile service in 2027, which pretty much puts it in competition with some of the big carriers in the US like AT&T, T-Mobile, etc., but also shows you a bit of where this business is heading. This is the kind of telecommunications spot, but it's indeed linked to, and that's kind of the now, and also very importantly, you're hearing about SpaceX turning a bit more into effectively a cloud business, talking about renting GPUs to other companies, and this is really what's driving the bulk of that AI revenue we've seen, which is north of $2 billion. So that's very interesting. And on the call, Elon Musk talked a lot about their access to NVIDIA GPUs and how that remains a competitive moat in an area where there's scarce computing power. But then what is the future? It's around space. This is a smaller segment for the company right now, but a lot is resting on Starship, the next generation rocket, which, if successfully tested and brought to market, would be the world's first fully reusable rocket. And this is key to ambitions in next generation Starlink and the future of the company. So it's sort of looking at this company, very interesting. Right now, it's cloud, it's renting out compute, it's around Starlink. The future for investors very much lies in what's happening around space.
Arjun, was comments that were made in the press conference specifically on AI compute. This was the line: we're able to deploy capital in such a way that we're getting less than 1 year payback. And if you put that together with how quickly they broke ground and began an AI compute, a big mega factory, effectively, that was mid-2024 in Tennessee. They turned an old factory into an operational supercomputer in a record 122 days. That's a very quick turnaround in terms of bringing compute to the market. And it's not just the one project, there are others. So how do we think about that data center build out? Yeah,
for now, that is really a huge focus, and they've been very aggressive on it. I think what's been interesting, and you've heard Elon Musk really praise NVIDIA and the relationship with NVIDIA, and Elon Musk is putting that relationship front and center because we're in an environment where there is a constraint on access to chips. And if you're a company who has access to chips, either from NVIDIA or memory chips or wherever part of the market that's constrained, to some extent, that is a very strong competitive advantage. And that is what Elon Musk is saying to the market. We have access to NVIDIA compute. We are one of their key partners right now. And so we can get that compute to market and rent it out. I think the question over the business model here is right now, it's a capacity-constrained environment. Everyone wants computing power. Right now, it seems that SpaceX is in a position to be able to supply that. The question is, it's a very competitive market when it comes to like CoreWeave or N-Scale, Nebius, etc., as well as the hyperscalers. Is this a sustainable long-term business model? And to what detriment is renting out compute to Elon Musk's own ambitions within AI and its own models? I think one of the numbers was sort of 10% capacity going towards Grok, the rest of that capacity being rented out. Is that enough for Grok to become a serious player when it comes to AI models? That's a big question as well.
Fascinating. Let's get some more thoughts too, Arjun. We've got Steve Wesley with us, founder and managing partner of the Wesley Group and former Tesla board member. Steve, thank you so much for joining us. You've heard some of the discussion. We're highlighting the capex spending here, the 18.4 billion versus these longer-term ambitions of hitting targets of annual revenue of 1 trillion by 2030. What should the focus be at this stage in your view?
Well, I think those are the key issues. Look, this was a high drama day. Share price had been down 13% from the IPO, but 50% down from its peak. So SpaceX came out booming today, and Elon had bold numbers, beat plan, on track to double revenues. Hard to argue with that, going from roughly 18.7 billion to about 38 billion for this year. But he came out and said, we're going to be at 100 billion before you know it. So SpaceX wants to tell the story. They're the market leader. They're the leader in launch. They're the leader of Starlink, 81% growth, 11,000 satellites. But people still have these questions. How quickly can they grow? How big are the costs going to be before this thing gets to profitability? And no one's quite touched on it yet tonight, but this is a unique IPO where shareholders have the ability to sell 20% of their holdings after just 90 days. That's now. So we're going to need to watch tomorrow to see, or later today, your time, to see how many people hit the door. It's going to be a fascinating watch.
Get into that and your instincts, because what we saw with the IPO is a lot of retail investors chasing fast money, and as soon as there was a hint that the stock was turning in the opposite direction, they were quick to get out. Now we're talking about some of the insiders here that have been locked up. They've been invested in the journey so far. Do you think they want to stick around? Do they want to cash out because they want some of those rewards?
Well, that is the conundrum. And Musk is telling the story, you got to hang in here. This is going to be $1 trillion, not market cap company, but revenue company. That's extraordinary. But you've got to remember, investors have been locked up for 10 years. A lot of them are looking at pretty darn impressive gains. Some portion of them is going to be hitting the door. But you got to hand it to them. When you beat plan in your first quarter after going public, that looks pretty attractive. But again, you've got to ask yourself for the long term, can they really beat Anthropic, OpenAI, Google? These are some pretty formidable competitors, a lot tougher than the Daughtery, Ford, and General Motors. And then how much is it going to cost to get there? I think if you've been locked up 10 years, a certain amount of investors are going to say, let's take the cash and run, but we'll see.
Steve, how do you make sense of where SpaceX is going with its AI ambitions? Right now, there's this focus on almost becoming a neo cloud of sort, renting out the GPU capacity they're able to get. Over the longer term, what is SpaceX's play around AI, particularly as it does compete with some of those companies you named, OpenAI and Anthropic?
Yeah, so look, to compete with the big boys, and that's OpenAI, Anthropic, and Google or Alphabet, you've got to have access to compute. Musk and SpaceX have been incredibly smart. They've lined up huge deals with Jensen Huang and NVIDIA. So they've been pretty foxy on that one. You've got to give them credit there. If you're an investor, you're delighted. But the question is, can they get enough revenues up front to make up for this massive build out in data centers they're going to have to do? And my heavens, if they start talking about putting data centers in space, you can probably add an extra zero to all of that. So there's a lot of things to account for. It's going to be a little confusing for some investors, but I think before you know it, we're all going to be talking about SpaceX. It's just so darn interesting, captures everyone's imagination.
Yeah, and how much at the moment, I guess, is being underappreciated or even overappreciated, in your opinion, around the space portion of SpaceX? We've spoken a lot about AI, around data centers, GPU, but what about Starship? So much is resting on this being successful because it links to what they want to do next around Starlink and the V3 satellites. What's your take on kind of how the market's approaching the space portion of SpaceX?
So I think it's kind of the unsung hero, but it's going to be an important cash cow. Look, I can tell the story. Elon Musk invited me down to their hangar in 2007 to see what he was doing, and he said he was going to cut the cost of propulsion, of lift, that NASA was charging the U.S. government by 90%. People thought he'd lost his mind. In fact, today he's brought it down 95%. You've got to give him credit there. And in a world with Starlink, when you can sell broadband to the rural parts of the world that have never had it, that is a sweet business. If you've got a network of 11,000 satellites, it gives you a huge competitive edge. Most people don't put all the pieces together as smartly as Musk has, and I get why it's captured people's imagination. But it still leaves the question, how much is it all going to cost? And can you keep revenues ahead of the capex build out? And that ain't going to be easy. We'll see.
One way, Steve, would be to add another revenue-making arm to the business. Do you reckon we could see a tie-up, takeover, a link with Tesla?
Maybe a car company you can think of? No, I think it's quite right. And look, Musk hinted at this at the last annual meeting, basically saying, there are collaborations going on as we speak. And I think the reality is there's a huge number of synergies between Tesla and SpaceX on chips, memory, compute, especially energy. Now you've got the SpaceX Colossus using microgrids powered by Tesla's Megapacks for load smoothing. I mean, this is extraordinary. It's irresistible. Merge the two, you're going to get the largest company in the world. I wouldn't bet against it, but there might be some regulatory issues. Some people are saying they might have to divest of Tesla's China plant. That'd be a painful one. We're going to see it all unfold. It's turning into the world's biggest high-stakes poker game right before our eyes.
Steve, you have a very unique position as someone who's been formerly on the board of Tesla, as a member of that board. What do you think is Elon Musk's focus now, having dealt with him, someone who presumably knows him pretty well? What do you think his next step, his next move, his focus is going to be in the coming quarter?
Look, I can't begin to predict what's going on in his mind. I will just observe he's usually a full step ahead of everybody else. And I think what he's realizing is he is holding on to some great synergies. He's got the lowest cost space propulsion capability in the world. SpaceX launch providing 51% of all rocket launches in the world, not just of companies, but in the world. So he's got that going. He's got this enormous space Starlink, almost a monopoly, looking at buying some of the largest US carriers. This is extraordinary. And now if you can start to put the relationships and contracts in place with the Jensen Huangs and NVIDIAs of the world, that's going to give him an edge in compute. You put all those things together, it does in fact give you the ability to put data centers in space. I mean, he just seems to continuously be a step ahead of others. The only fly in the ointment is sometimes there's a little overpromising. Sometimes you don't hit the deadlines on time. And when you're talking about this volume of money, you need to be pretty buttoned down. You're going to see a lot of financial engineering here. It may be as exciting as the space engineering.
Steve, I want to pick up on some of those points around the depth of money required here to build out, because it's a very similar story at OpenAI, the frenemy of Elon Musk, Sam Altman. It feels as though there's a lot of storytelling taking place here to keep investors on the hook, wanting to pour more and more capital into these ventures. And we heard it a little bit yesterday from Elon Musk as well. He was talking about the sci-fi nature of what he wants to build out. Very similar to what we've heard from OpenAI. It's very sci-fi that we've now had a lot of this incredible AI escaping from sandboxed environments. It's so clever it's been able to escape the parameters set by humans. That's been the narrative from OpenAI. What we heard from Elon yesterday is that, look, we're going to need more robots. They're going to be deployed to help build out future factories and power facilities on the moon. It sounds super sci-fi at the moment. Isn't that what we're hearing? Sci-fi is new terminology for marketing some of these ventures to get investors to put more capital into them?
Well, I mean, he's a master storyteller. He always loved science fiction, but how many of us get to actually bring science fiction to life? So you got to hand it to him with what he's done, especially with SpaceX. But to get from here to there, you're going to need to raise a lot of money. Investors get fatigued if you don't meet milestones. You know, there have been some problems at Tesla. He reconfigured the entire industry, but struggled a bit with full self-driving, and those Optimus robots still haven't been reporting to work yet. So you're going to have to hit the metrics to keep up the momentum, and it's not going to be cheap. But there's certainly a lot of financial support to date. The big question, I think, is going to be, can he go toe-to-toe with Anthropic and OpenAI? All of the companies are going to have to be reporting how many users they have and what their revenue growth is. If he can be competitive in that ballpark, I don't think there'll be any stopping him.
Steve, thank you so much for joining us. Great to hear your thoughts. Steve Wesley with us, founder and managing partner of the Wesley Group and former Tesla board member. Coming up on the show, we'll bring you our conversation with the CEO of Siemens Energy after the firm beat expectations in the third quarter. Plus, the earnings continue thick and fast here in Europe. We're speaking to the CEO of Fresenius after it raised its 2026 guidance. And we'll cross out live to Copenhagen, where Carolyn will be speaking to the CEO of Novo Nordisk after the Danish pharma giant's earnings disappointed investors.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone at CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Let's check in on the markets and a strong performance for Asian equities, really picking up on that rally, that stonking rally that we saw on Wall Street overnight, with both the Dow and the S&P notching intraday record highs as well as fresh closing record highs. That really setting the tone for the Asian trading session. Look at that, some really impressive gains, particularly on the Kospi, which has had a roller coaster of a couple of weeks, but advancing more than 4% in the session. Also, the Nikkei 225, been a lot of interest in what's happening in Japan with that intervention, joint intervention between the Japanese and the United States authorities to prop up the yen. We're seeing a real strong rally on the Nikkei 225 there. The thing that's driving the Japanese and Korean stocks is that momentum around AI stocks. We've had those positive upbeat earnings results. US, we saw Palantir shares surge almost 30% after a really impressive set of figures. So that is what's happening in Asian equities. Let's see what we are expecting when European trading gets started for the Wednesday session. And again, very much risk-on sentiment building on the gains we saw yesterday. In the previous session, the Pan-European index had closed almost 0.75% higher, gains across all of the key regional benchmarks. And the futures indicating that they will build on that. But we are still about 40 minutes away from the open. We'll count down and keep an eye on how things change as we approach the opening bell. In the meantime, Fresenius has upped its 2026 earnings guidance, pointing to strength in its hospital and pharmaceutical operations. Second quarter results at the German healthcare group came in ahead of expectations. Michael Sen is the CEO of Fresenius and joins us now. Michael, good to have you with us. Just talk us through the last quarter.
Yes, good morning and thanks for having me. We are really pleased with another very strong quarter after already a strong Q1 delivered by Team Fresenius. And from this position of operating strength across all of our businesses, really firing on all cylinders, we are raising our full year outlook for core EPS growth to 10 to 15% for the full year. If you look at quarter two, competitive growth of 6%, Kabi with 7%, particularly I want to highlight biopharma with 38%. That is obviously delivering margin expansion and an EBIT growth of roughly 10 to 11%, margin expansion to 12.3%, and core EPS 14.5%. And I want to also highlight that this is the highest capital return in a decade. But what is really important, this is more than a streak of continuous execution, which it is if you look at the last 4 years. This is actually a shift, a step up in the quality of earnings, because if you see the growth vectors, how they are scaling, being exposed to highly attractive growth markets, winning traction and market share, and thereby delivering incremental profit, and the hospital, the system business demonstrating resilient earnings even in changing regulatory environment, because as a market leader having the network effect, they can always play and adapt, for example, with AI and digitization. So future Fresenius is exactly delivering what it has been aimed for, faster growing, higher quality, stronger Fresenius, benefiting millions of patients worldwide and creating shareholder value.
We know that the German government needs to deal with what some describe as a ballooning deficit in its public health insurance funds. How concerned are you that that could put some downward pressure on the prices it's willing to pay for the sorts of drugs that you and your competitors make?
Well, that has been a key theme in the last quarter, because there was a draft of a regulation of a law which now has been passed. And we see that the law which has been passed is obviously already incrementally better than the draft. There is always pressure on healthcare systems as we have aging population. On the other hand, we also have tremendous growth drivers because chronic diseases are on the rise. So the winners in this game will be, particularly in the hospital space, those who have a system, who can play network effects, who have procurement power, who can integrate care delivery between ambulatory and the hospital system, who can bank on digitization, automation, and now on AI to be more efficient, to deliver higher quality, and then gain the volume, because the volume in all countries will grow because of the demographics.
Michael, it's Karen weighing in, and good to see you this morning. Let me just hone in on the biopharma space that you called out. And we know you've been scaling this business, that you've had some success in recent quarters. What did you see in this quarter in particular that was so encouraging?
Well, first of all, we now have roughly 11 products on 8 molecules out in the market. This is a tremendous change if you compare and contrast it to 3 years ago. So we're gaining traction in the market. We have a blockbuster called Tyenne. It is going from strength to strength. In the UK, for example, it has a market share of 75%. It's growing in the EU 5 countries. It is gaining share in the most important market, which is the US. And now in Q2, we see almost the next strong leg developing a new molecule, denosumab. We call it Conexense or Bomyntra, particularly in the oncology space, gaining traction. You may have heard the news flow that we filed for application, and it was accepted at FDA and EMA for a new molecule. We also broke the news day before yesterday that another molecule, rituximab, together with Dr. Reddy's, we will commercialize this in the US. So the pipeline is growing. We are getting better and better in, keeping check of the manufacturing costs, and our development engine is just mind-blowing.
We've spoken at length too this year about how Europe needs to rethink its approach to the pharmaceuticals industry in light of the most favoured nation policy in the US. And it feels as though President Trump has pushed forward the agenda for big pharma stateside, giving them somewhat of an advantage. In recent days, we've been talking about the potential consolidation of AstraZeneca with Bristol Myers Squibb potentially bulking up more in terms of its US presence. What do you make of the landscape and how it is still changing thanks to Trump's policy around big pharma?
Yeah, well, I think we needed to put it in a big picture. The world order is changing, and it's not only transactional. The world is actually gearing also towards resilience. And particularly in the pharma sector, what we see in the US, you want to balance affordability, domestic manufacturing, and then put it into a public policy. What we see, particularly because we are in the critical care, highly specialized generic space, that there are now incentives for domestically manufacturing. The actions of the CMS is gaining tractions that hospitals are encouraged to buy products from domestically manufactured companies. And this is where exactly we match, because in your show, we've been alluding to that a bulk, roughly 75% of what we do is produced in the US for the US. The other thing which you're alluding to is that scale matters. Scale in particular therapeutic areas, whether it's in autoimmune therapeutic area or on oncology, the scale matters, because then you have a very cost competitive position, and obviously an advantage in the go-to market, and also vis-a-vis the regulatory actions, you have a voice.
Michael, does that mean you expect to see more consolidation in big pharma? I think the phrase was coined the other day, huge pharma. Do you think huge pharma is coming?
Well, the pharma sector is so big, there's place for many. We're talking, or you're talking particularly on branded pharma. We are a highly specialized IV generics pharma. Then there is special pharma. Then there is biosimilars and biologics as such, where we talk already about the next generation of antibody drug conjugates, bispecifics, multispecifics. So that sector is so big. But as I said, scale will matter, and there will be consolidation or partnerships also, going across the real pharma space, where I believe in ecosystems you will see more partnerships, for example, with big tech companies or with startups.